Hello friends, welcome back. Today we are going to demonstrate how we can effectively pick the potential bottoms of volatile stocks. More the volatility, better for us. If you have seen the last Tesla video we have posted, we are getting close to where we want to be looking at getting into Tesla. Now remember, one thing is the position and other thing is tactical moves you have to make to mitigate the risk. So no investment is entirely crash proof. Actually, in real life we have to be focusing on responsible and informed investment practices so we can make informed decisions and navigate the market with greater confidence regardless of the catchy marketing slogans which you see all over. Remember, there is no single golden rule for picking stock bottoms. You can always perform your own thorough research, look at the fundamentals, technicals, sector rotations, which we will talk about in next week lecture. So let's say you come with 10 stocks you want to keep buying, you're 20 years old, and by the time you're 40 you want to retire. So we can learn this simple technique and try to pick the bottoms and you build on your portfolio. Not getting into exciting phenomena where you're looking at a runaway markets. They always will rotate. Now sometimes they don't. And also, as I told you, have a 10-20 year horizon, and let's say you want to retire in 20 years, and with that you build your portfolio. All right, so let's bring up a tool here. So we're gonna go after Crashproof investing made easy. L3 tool. Now this is a daily chart of Tesla. Remember, our agenda is not to chase the market. Buy the dips, buy the dips, buy the dips. Everybody talks about it. So let's find those dips. So this is your dip locator. All right. You see there are a lot of complex mathematical structures being displayed here. So when you get to these levels, right, so from this structure, this is another way to look at the frequency. All right, and this frequency is what we are after to see if you have reached that spot. And we also have these trend lines coming here suggesting that once the trend line is broken at these levels, that is where we are going to enter the market. So if it keeps going down and down and down, don't have to worry about it. We need one closure on the other side, which happened here after the trend line break. And this is where we enter the market. And you get a $50 run up. So now you buy the stocks here. All right, now you can sell the puts here, 6 months out, yearly out. Now there are 10 different ways to tactically get involved, or you simply buy the shares. When the market goes up, you hedge it. All right, because when the market is bullish, the puts are much cheaper. So let's say what happens is you hedge it at the same location. Do not hedge it here, hedge it the same location, let's say 1 year out or 6 months to 1 year out, and it's out of the money. What happens is market goes here and it comes back. If it comes back, you made so much money on puts, you can buy another set of maybe same amount of shares. You invested with X frequency, X investment, and then you added another set of shares for free. This is how you amplify your stake. All right. So we did that already. So now our market is here. Now market is here. It's making a top again. And how do we know it's making a top again? Because it is coming back down. That's how we know it's making top. Now this is for people who don't have sophistication of other things. Now this is a good point, because if you look back in time, you can see vertically right here, it pinpointed the bottom. So we know that we have, in a balance point, picked up the right price target. Now you have to understand a lot of things, but that should be enough. Now from this point, this bar projected same thing again. So your puts, which are 6 months to 1 year out, now they are in the money by $75. All right. Or it was out of the money $75. It came in the money. You still have 6-7 months left. So you'll have good value. Sell those puts, buy stocks again. So you bought 100 here, you buy 100 again here. Plus your buy outlay cash flow has been reduced by having the profits here. And there was nobody stopping you to buy puts, maybe add the money a little bit, or vertical spreads. That's all tactical trading, right? All right. But you have to give more money out. So that is a better approach, one of the better approach. Again, you have to be mindful of your investment strategy, investment go-to plan. And then again, the market comes here, time and price. Let it close below this and open at our price. It happened here too, went here and trying to chop. But here it is much better. It went down and closed. If it doesn't do that here, next one is waiting for us, even better. So if I buy 100 here, I'll buy 100 more here. So you have to plan your 3 or 4 times a year buy programs across 10 different systems, and they will always get you 10, 20 opportunities, perfect opportunities across the whole year. Where are we now? Again, market went up again. You did the same thing. You bought the puts again here on the top. At this price level, it came and it crossed below. All the profits, you buy another 100 shares. Now let's see if the location is ready or is getting ready, right? So it may be getting ready. And if you understand the last video on Tesla price projections, we know where those projections are. And they've been there for almost 6 months, tops and bottoms. And here we are. Now look at this edges, right? These are also picking up the good pivots. So this is also good location from where we can trust the bottoms coming in. So again, if you had the puts here, which a lot of people did, some people got out scared here for a penny profit, 10-20%. We are looking for 10x profits, right? So let's assume that you put 5,000 or 10,000 here. 10,000 went quite a bit in the money. You put $1,000. That became another, let's say, 5x. Put the money again here, add more money. Now your 200 shares going up. Do the same thing here. 2x puts. Now at this point, you have to start thinking about, okay, I'll buy here. What else can we buy here at the bottom? Let's see. 125, which is perfect if it gets here, even better. Now, once you get there, we can start buying puts even at 75 or 100, 1 year out. Because remember, we want to take the ownership of selected 5-10 companies which you think are going to sustain and not die out in the next 20 years. And these are your retirement friends. You're doing collaboration with these guys, right? That's all there is. So then think if it goes down here, a little bit down and closes above. So this location looks good. I think it's close to where our locations targets were, 170 area. Last time I was trying to pinpoint a dollar, it came and bounced off, right? So you can start maybe investing 25, 50% of it add 50 here, 25 here, 50 here, right? So some strategy you have to come with once you have these sophisticated tools and the understanding of the market. Again, we started with saying that responsible and informed investment practices, right? These are these practices. All right. So here we are again. Now again, this is not a buy or sell investment advice. This is just we are sharing and demonstrating the power of advanced technical analysis. So I hope you enjoyed it and you can come with your own planning how you will get involved in the market. Thank you so much.